Let's understand how banks give cash credit facility against book debts. Here is a small case. X Limited was sanctioned cash credit limit of 10 crore against receivables with the following condition, where the margin is stipulated at 40%, cover period as 60 days. To avail this limit, X Limited submitted the debtor statement which had the following information, where the outstanding debtors are 15 crore. Of that, debtors aged greater than 60 days is 5 crore. We have to calculate drawing power for this CC limit against book debts. At first, what do I mean by book debts? These are all debtors which are created on account of credit sales made by the entity. Let's see what are the general aspects that comes into picture when it comes to CC against book debts. Normally, banks will be stipulating a higher margin. If for inventory they are stipulating margin like 25%, then for debtors margin will be in the range of 30 to 40% because of the risk. The risk is, in the event of default, bank will not be able to take control or possession of the debtors. Because debtors means this is all the money due from the customer who have purchased goods on credit, and those customers may be spread across in different places. So the assets will not come to immediate control of the bank. If it is inventory, bankers can take possession, but that is not with the case of debtors and the risk is high. That's why higher margin is generally stipulated. And when bank is going to give cash credit against book debts, they will stipulate a condition that any receivables from associates or related parties have to be excluded. This is to ensure only genuine trade transactions are funded and not the transactions that are happening within the group. Number 3, banks will always analyze the average credit given by the company, and based on that they will fix the cover period. And number 4, if the debtor's age is greater than cover period, then no funding will be given. In this case, this company has a debtors of 15 crore. But of that, only 10 crore is within the cover period because they have mentioned cover period is 60 days. And in the case it is mentioned 5 crores of debtors are outside the cover period. So out of 15, 5 is outside the cover period. So what can be considered for funding purposes? Only 10 crore. Now we have to calculate the advance value. Advance value is nothing but taking the eligible debtors, reduce the margin at the rate of 40%. So out of 15, only 10 crore is the eligible debtor. From that, let us deduct the margin at the rate of 40% on 10 crore, which works out to 4 crore. So the advance value for these debtors is only 6 crore, even though company has submitted debtors for 15 crore. Now, this 6 crore advance value have to be compared with the sanction limit of 10 crore. Drawing power is always whichever is lower. So let's do that. Advance value is 6 crore. Sanction limit is 10 crore. Drawing power is whichever is lower. So in this case, drawing power is 6 crore only. And here we go. Credit and Financial Analysis Mastery course. It's a comprehensive pre-recorded online course that comes with 15 modules of video lectures, basically 70 plus hours of video contents, multiple ebooks and reading materials related to credit and financial analysis that will make up another 30 plus hours of content. So totally it is 100 plus hours of learning resources. Then you will also get access to a private community in Telegram for clarifying your doubts in credit and financial domain. Then you also have the flexibility to choose 1-year subscription or lifetime subscription depending upon your learning goals. So by joining this course, you will learn basics of credit analysis, how to read balance sheet, financial ratio analysis, cash flow, fund flow analysis, how to arrive at credit risk rating, how to prepare CMA report, cash budget, how to assess credit facilities like CC, OD, LC, BG, term loan, how to write bank loan proposal, and you will also have access to case studies related to credit analysis. So to join this course, to know more about the course, comment CFA, and I'll share the details with you.